Well, a lot of people are starting to receive their W-2s. You might have gotten yours in the mail, and some people can't wait to file because they want their money back from the government.
Provided you're getting money back.
Correct.
If
you're
not,
going to get it back, you want it back.
stretch it out as long as you can. All right, now if I have my W-2s, can I file my tax return today? Our next guest helped us with tax season last year, and it's great to have CPA and financial expert Marshall Gunn back for another season of Tax Tip Tuesdays. Marshall, it's so good to see you.
Absolutely glad to be here. Always a pleasure.
Yeah.
Good to be back once again.
Can I file, if I got money coming back and I'm anxious, can I file now?
No, that's the scary part. One more day. One more day. Tax season officially opens up tomorrow. The IRS can begin accepting tax returns. You know, Congress made the changes at the last minute. It takes a little while for, you know, the computer programmers to get everything done so the IRS can catch your tax return and get your refund to you in time for Valentine's Day.
That's actually not too bad. I mean, we were kind of thinking it might even stretch a little longer or whatever, so I think they worked pretty quick, yeah?
Well, if you have a simple return, you're good to go. Now, if you have things like educational credits, another 2 weeks before they'll accept those returns. Okay. But if you just got the basic W-2, get that in, get the refund dollars back, and you're good to go. Now, the real key to that is filing electronically and doing direct deposit. If you do those two things, you'll speed your refund up by a couple of weeks.
Oh, good.
So a couple of good things to do.
And last time you were on, we were talking about the fiscal cliff. You know, it went into the new year and everything. And how is that going to have an impact on taxpayers this go around? What do they need to know?
Well, they need to know all the things that got added in, those extenders that come up right at the end of the year. And they have to be careful to make sure they don't overlook some things that came out of the law, then came back into the law, and we're using those to go forward.
Now, if we're rushing, we tend to, overlook maybe some deductions because we're trying to get it in quick and you want to do it online or whatever. What are some of those that we might miss?
Well, let's say, for example, you're a teacher. You know, you don't have a lot to your tax return per se. You've just got a W-2. Boom, you're ready to go. But there's a deduction for classroom supplies for $250. You might overlook that. You've also got individual retirement account contributions that you can still do up until April 15th of this year and have them count for last year. So that's a real plus for you. Mortgage insurance premiums, something if you're paying mortgage insurance, not homeowners insurance, mortgage insurance, that got added back into the law, something you just might miss when you're preparing your return if you do it quickly. So you want to, not rush into it. You want to take the time and not miss those great deductions that you're entitled to.
Sure. Yeah, because if you forget those deductions, then you're going to get less of your money that you've already paid into the government back.
Trust me, the IRS won't come back and say, hey, did you happen? We want to give you some extra money.
Right.
Not going to happen.
No.
Has it ever happened?
No.
Yeah. Oh, by the way, here's some more of your hard-earned money back. Okay, so what are we going to be focusing on this year? I know that you're going to be coming in and you're going to be doing weekly tax segments, which are really great, that give people an idea of what we need to be doing to make sure we do this right.
Well, exactly. And what we'll do is break down a 1040.
What's a 1040?
A 1040 is the tax return,
the
big form that you file, and we'll break that down to different parts that affect different people. So we'll look at itemized deductions. We'll look at rental property. We'll look at, if you're a civil service employee, some of the things you should be thinking about. Thinking about dependents and what covers. So we'll kind of just break it down a little bit each week so that you can, look at that segment that is really important to you because suddenly you found yourself with a piece of rental property last year. Or maybe you're an investor. You want to look at dividends and capital gains. So we'll look at all those aspects over the course of this next few weeks.
Now, if I get online, or not online, but I get one of those software tax programs that they have, and I kind of do my own taxes.
You can do that online.
You do it online as well?
You can do it online. Yeah, there's software out there.
So if I'm doing this, I'm not very. I give it to Marshall and I say, please take care of me. So it's much easier that way. But if somebody is doing it online, which you can, or they're doing it, on one of the software programs. Are there still things that we can bring to you and make sure that we're doing this right?
Definitely. One of the services that we've had requests for over the last couple of years, and now this year we have it in a full-blown status, is please review my return with me. You've used that software, but now you want to sit down with a CPA professional and kind of just ask some questions, roll through. Well, instead of having us prepare the return, we're just there to consult with you and those, well, did you think about? Or maybe did you do this last year? Simple stuff like, did you buy a car last year? Well, there's a deduction for sales tax on that car. So just to ask those questions of things that you might have missed that'll save you a little bit of money. Or if you've got something in there that, well, I was at a cocktail party and they said it's deductible. well, cocktail party advice isn't always great for preparing your tax return.
Right, exactly.
So it's a case of having
And
a
who are
professional.
they? Who are they that said that?
Yeah. Are they
People throwing the
Are they
party?
in Internal Revenue Code section? No, they're probably not. And there was probably adult beverage involved, so who knows what
then
that
it gets
deduction was.
It gets blown up. So you have a special going on for people who are watching right now?
We do. One of the things we like for the First Coast Living listeners is to offer them the opportunity.
Or watchers.
Or watchers.
Either one.
Listeners,
Take your
watchers,
pick.
If they're
Yes.
cleaning, they're maybe just
viewers, to come by, and we will do a review of their last 3 years' return, 2011, 10, and 9, to see if there are some deductions they missed. Or we'll review their investment portfolio. Take a look and see, is this right, or do you have the right investments for you? And so it's a great opportunity to meet people, no obligation, just have some time to spend with them and maybe put some dollars in their pockets.
That's great.
Thank you, Marshall.
My
I
pleasure.
beat you to it.
Always
You
great to see
did.
you. Yes.
But I'm shaking his hand longer.
That's true.
Okay.
All right, thanks to Marshall Gunn
It's
for
like
the
you can let go now.
valuable insights, and to Gunn Chamberlain, PL and Gunn and Company Investment Management for sponsoring this segment.
Yep, they're right there. All their information, if you need to contact them, is there on the screen. We're going to have Marshall again back every Tuesday for Tax Tip Tuesday. If you would like to schedule an appointment with one of Marshall's CPAs, call the number on your screen, 904-296-2024, or log on to gunnchamberlain.com for a wealth of financial information.